All right, welcome back for another episode of This Weekend Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So I'm actually doing this video on Monday, which I'm glad because a lot happened here in addition to last week. But you can see here the market did continue lower in last week's trading. We also closed, and I want to talk about this, the monthly here. We closed below August's low. So something of note there on the SPY. We did take out that low on a monthly closing basis. I also talked about the weekly close last week, but we did close below on the monthly as well. So continued weakness there. And still seeing some signs here that are a little problematic, right? So the market here today basically closed flat on the day, down 17 cents. But there's a lot of problems. I talked to you guys last week about HYG and JNK. That continued today. So HYG gapping down and pretty much a gap and go to the downside. That's, borderline free fall. Take a look at JNK as well. If these things are going under, it could indicate that credit spreads are going to widen. And if that happens, we have some bigger problems here other than interest rate repricing. I talked about VNQ as well. That did pierce double bottom today. So again, commercial real estate, that's something we've talked about a lot. And this is, a real estate investment trust ETF for all intents and purposes. And looking at the monthly, not a good pattern, right? Big monthly red bar inside of that could be setting up for a move lower. Additionally, we're going to cover gold, but, look at gold here. This has come down very sharply. And if I show you, also priced in yuan, pretty big drop there. So looking at, 475, 480 all the way down to, roughly 450 here. That was in the last week or so in yuan as well. Why am I showing you this stuff? This is kind of what happens, gold is something that is used to sell when you get margin called. It happens very often. Another area that really blew out today, I didn't talk about it last week, but utilities was down at 5.5% at one point. If you know anything about XLU, there shouldn't be plus minus 0.5% in one day. And it's actually down about 20%, I think. So 66 down to 55. 15% in about 2 weeks, and we blew out today pretty sharply. I mean, we're looking at, multi-year lows here. So going back to 2020, this little pivot here got taken out. Now, there's a lot of support here, but my point is sectors that are not supposed to be doing this are doing, very, very strange things. This is typically risk-off utilities, and right now, it's getting hit really hard, and the market is actually going down, right? We're seeing the spiders go down, but XLU is selling. Could that be a positive divergence? It's possible, but not when I see what JNK is doing. And right now, you're seeing money, first of the month here, today, first of the month, money kind of FOMOing into the Magnificent Seven with interest rates really pushing up. Look at the 30-year there. So definitely lots of distortions out there. But you see Apple and Nvidia getting a bid here today. If we look on the intraday, you can see right off first of the bat, first of the money flow going into big tech, which is normal. But very strange to see them hold those gains considering what happened with the rest of the market. So lots of red flags out there. Right now, though, as far as the charts are concerned, short term, I still think we could get a little bit more of a bounce. If you look at the SPX, I like that a little bit better. This is kind of your level for bulls. You got to get above 43.35.15 on a daily close. Then you can push up to the 120 moving average. But if we stay down in this area and just go sideways, it's going to make this trend line minor, and you could set up a bear flag for another push down. What I'm seeing in the charts, what I'm seeing in some of these assets, utilities, junk bonds, is definitely very concerning. So be aware of that moving forward. This is definitely a highly volatile environment, and definitely size yourself. Position sizing is going to be important, and risk management is going to be important here, because honestly, it could go either way here. There's really nothing to say it can't. But I'm definitely seeing some problems out there. Again, we talk about financials. KRE is not a very good chart here either. So, you really got to hold this 40 handle. Maybe I'm seeing this along with junk debt, along with, real estate, all looking very weak. So just be aware. Very, very tough environment. Anyways, triple Qs, again, got a little bit of a bid today on Monday. Stalling out at that 100 moving average in this trend line here. If this continues up, you've got the gap there at 364.54 and the 20 and 50 at 370. That's kind of your max upside here in the near term. But the Q's got a bid here. And again, I think part of it is the Magnificent Seven acting as risk off, which again is ironic because interest rates higher means their multiples are higher. But they're also stable companies, so that could be the thought process there. But very, very interesting times here. Russell 2000, again, here's another problem. If it's a risk on, right, this should be rallying, and this got bludgeoned today, down 1.5%. This is a head and shoulder top with a target of 165. So again, Russell coming in very sharply. Again, small caps risk on, and right now it's risk off. So just be aware of that. Dow here finished down just 0.5% today. That did decline last week as well. Also closing the month below that breakup candle on a monthly close. Additionally, one other thing you could look at, I'm going to get rid of this trend line here, and it's the Dow. It's just price cap weighted, so we don't make too much out of it, but you can make a case that's a head and shoulder there as well. So that would take you down probably to around that 320 handle, which would be very good support. But keep that in mind. So we're seeing some problems in some of these charts here. Semiconductors, that got a little bit of a bid last week towards the end of the week, and then today finished up just $1.25 on the SMH. Still has some resistance here with this trend line, the 120 moving average, but it's holding up okay. It did close the week. I don't like that we had that weekly close below that August pivot, but they're trying to hang in there for now. If this rolls over, it's a big negative for the market. Cloud software via the IGV, again, that got a little bit of a bounce towards the end of the week last week. This still has resistance around 350 if it can get through this gap. But right now it's holding up, and we'll leave it at that. Another sector I don't like, transports. Again, don't like to see this leading to the downside, down 1.14 today. Hammering on that 200. The longer this hammers on the 200, the weaker it's going to get. So you don't want to see bear flagging here. Otherwise, it's going down to 14,000. On the upside, you got to get through this pivot, and then you can get to 15,250, maybe 15,300, but not great price action there for the DJT. Interest rates here, which we touched on a little bit with junk bonds, but very important here to look at the 2-year. That was green today, up 6.5 basis points. If this takes out this pivot and gets through 5.33, it's a huge problem because that means the Fed cannot stop hiking. The market does not want to hear that right now. 5-year holding up, 10-year holding up as well, new nominal high there. And same thing with the 30-year. These are getting stretched, so be aware of that. I think yields are getting stretched. If there is, just to keep this in the back of your mind, if there is some type of credit blowout, bonds will finally bid. But until then, yields are holding up and the trend is up, so respect it. Another sector I don't like, XHB home builders here, down 1.23% today on Monday. That's a bear flag, and it's above this trend line here, which is the positive. But again, much like the transports with that 200 moving average, the more you hammer on this and the more you go sideways, the weaker this trend line gets. If we start to break through that, you'll have some daily support at 72 with the 200 MA. But the bigger level here on the weekly is right around that 70 handle. There's a lot of support there. But home builders also finally respecting that higher for longer narrative, and they are coming in. Confirmed weekly downtrends. Also taking a look at the weekly on the XHB as well. Green bar low, green bar low. What did we do the last week? Or I should say the previous week, we closed below that. And on the monthly, we closed below this breakup bar too. So be aware of that with housing. VNQ, we already talked about. That's in a double bottom. That may get a bounce here, but still not a great chart. XLF breaking this trend line. That is confirmed now below that. That's probably got to go down and visit 32. Again, KRE got to hold the 40 handle. KBE, has a little bit of support here at 36. I don't want to see that break. Otherwise, we're probably looking at 34.50. Broker dealers, that's still holding up okay, although we now have a weekly downtrend. And I would say there's good support at the 200 right now. Getting over to commodities here, So crude pulling back, this is getting very top heavy here in the medium term. So it's had a big run. I mean, take a look at this. Up, down, up, and big move there into that weekly pivot. And on the monthly, we did close below these pivots here. So I think crude has to do some backing and filling finally. Again, if there is some type of credit blowout, and I'm not trying to, fear monger that, but this is just the reality of what I'm seeing. Crude will come in. But again, if you follow this channel, you know there's higher floors in commodities, higher floors in oil prices specifically. But that doesn't mean they can't come in. Nothing goes up in a straight line forever. If we take out this pivot, it's down to the mid 80s. A lot of support here at 82, 83, 84. And that's where I would look for spot crude to come down into. XLE finally coming back in as well. There's some daily support at 88, but bigger level is at 85. XOP, pretty good outside move today. This is due for some correcting as well. A lot of support at this trend line. I'm going to get rid of this one. We don't need that as right now. But right here, and then 135 would be a bigger level there for the XOP. OIH also coming in as well. That may want that 20-week moving average right around 320. So that could be a downside target here in the not too distant future. Also another hot sector finally coming in. Let's look at CCJ first. Uranium. I told you guys 3750. Bingo. So we got right there today. Low of the day, 3706. And it did come off the lows. It was a pretty good outside move though. And again, this is just a very hot sector. It went parabolic. You went into this, historic peak here. You're overbought. It needs to do backing and filling. That's really all it comes down to. So this sector may finally cool down. There's a URNM. Got very close to that 50 handle. But again, went into that big pivot. It's overbought. Needs to do some backing and filling. So again, I wouldn't commit new capital to it. If you're long as a swing, trail your stop. If you're hodling it, you'll be fine. Another commodity here broke down last week, and this also, gets a bit of a red flag. So you look at wheat here. That did recover a lot of the losses, but what I don't like with wheat here is we closed below this pivot on a monthly. Part of me thinks this is just end of quarter manipulation. They just wanted to shake people out. That's certainly possible, but you did close below that on a monthly. I am kind of in back off mode right now, and it's got to prove it to me that it's going to put in a bottom here. I don't know if it's going to reclaim this. If it does, and you get above 600, then maybe things can change here. If it can't do that, it probably wants to go down to 5. But right now, could have been an end of quarter shakeout, but I just don't like that you close below this pivot on a monthly basis. That's just definitely a negative. Still a lot of support though in this belly right here. That's a big base, but we did come in. Again, maybe it's a sign of more liquidations going on. We talked about gold a minute ago, but yeah, definitely a pretty good slice there on ZW. Nat gas here, not a whole lot going on this week. It did have the contract rollover. It came back in today. This weekly chart is really strong. But I can't rule out some backing and filling, more backing and filling, possibly to that gap, into this trend line. But that weekly chart looks ready. I know it's looked ready for a long time, but I mean, that is a power base right there. So you can get a weekly close above 303 or whatever this pivot is, 302, 303. I think this shoots up to $4 pretty quickly. But again, it's been in a grinding range for a while here, and it really needs that kind of catalyst. I think if it's going to get one, it'll be geopolitical. All right, dollar index 107, so continuing to push higher. Last week, little pullback, 1-2 pullback, and then pushing up into 107. Be advised, this isn't a weekly resistance, and you're working on 12 weeks in a row up now. However, the monthly trend on the dollar is up nicely. And we just had a breakout there, so just respect it. Again, if there's major problems, this could be a flight to safety. Be aware of that, but dollar holding up. Gold here, again, we talked about that. I do like this for support around 1825, 1830. I've talked about that for a long time, probably going back to before summer. But what I don't like is that we closed the week below this green bar. Okay, so I don't like that. I do like on the monthly, though, you have this wide range green bar low, which is at 1813. So right in this area, there is good support for gold. But I have to see this and I say something is wrong. I don't know if somebody's getting blown up. Maybe that's what's going on with JNK. Maybe they're liquidating and they're getting margin called. I don't know. But there is something really wrong when you see gold break down like that with no news, especially when you had a nice bullish pattern going, right? Nice wedge. We were following that and it broke down. So something's afoot here, if you ask me. Silver also heading lower. I think this wants a Pierce of 21. That is a good buying level. I will be picking that up myself. But take a look at that reversal Friday and into today. But get out of the way until a Pierce of 21. And then platinum also heading lower. That should get to 850, 860. I like that as a buy as well. Palladium also stuck. I think that needs to go Pierce 1100. And then copper rallied up last week, but then reversed pretty hard today. I think that needs to get to 340. Lastly, Bitcoin here, actually holding up nicely and got a nice pop. I want to show you this pattern here. This is technically it's an inverse head and shoulder on Bitcoin. So good news. I think this can go to 30,000. So if I copy that and we put it right there, look at where that takes us, right to 30K, whole round number, and guess what? Weekly red bar high. So that's probably where it wants to go. Doesn't mean it'll go in a straight line. You might need to do a little flagging first, but I think that can get up there. The only problem I have with the sector right now is it is so illiquid that I just don't trust a single pattern that I see on it. Because look, we had a beautiful bull pattern that broke down, and we had a nice bear pattern that had a one-day pop that failed. Then we had another bear pattern, and then that failed. So I don't trust the moves right now, but right now, I'll give it the upside bias of 30K. Right now, you are stalling out at 28.6, which is this kind of point of control here. So if you can get through that, it's definitely up to 30,000. But Bitcoin, getting a little bit of a pop here. Maybe that's trying to tell us something too. Again, remember Bitcoin was kind of a little bit of a canary before when we had the regional bank crisis. I'm seeing this stuff going on in gold here, JNK, HYG, XLU, the yen. We didn't even talk about that. Take a look at the yen here. By the way, I just remembered, Japanese yield curve is now the steepest in history. So maybe there's something out there. That's really all I'm going to leave you with here today. Anyways, to next week, watch this level here short term, 43.35 on the SPX. You get a daily close above that. That opens up the door for, probably 4,400. But for bears, you don't really have to do anything except keep it in this range here and go sideways. And then you can get potentially another drop. But maybe there's another shoe out there. But it certainly feels like there's an elephant that is in the room. Maybe we just don't quite see it yet. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I will talk to you guys all next week.